Well, let's talk inflation. And of course, every day we talk about all the items and the prices that we're seeing going up. But a lot of folks are also worried about their 401k.
Oh, for the love. Yeah, pensions and other long-term saving plans. But when was the last time you actually checked your balance, like on your 401k? Are you afraid to? I certainly was afraid to.
And I tried to tell you not to do it.
I know. They say not to do this, but I'm going to check my 401k.
Don't do it, Mike. Don't do it. Don't do it. I wouldn't do it.
Corey was pretty good there. All right, we have our financial advisor, Rob Wilson, is here now to answer some of these questions. The first one right off the top after all that screaming is, should you check your 401k balance or not?
You absolutely have to check your balance.
Oh.
You absolutely have to do that. Listen, if you have a kid and the kid goes and scrapes his knee, right? You don't go, he'll be fine. And, you know, that wound's going to heal up.
My parents did.
Some of us get a little bit more tough love than others,
I'm
right?
going to turn you forward.
But, you know, you have to go look at it because just ignoring it doesn't mean the problem is going to get better. A lot of people haven't really understood what they own inside of their accounts. They don't know what those boxes that they checked on those forms when they filled out their 401k mean.
Right.
So this is a great time to actually do some inventory, understand what you own. Doesn't mean that you need to panic or go and do a rash decision.
You know how people are, though. People will just leave their bills in the envelopes on a desk and don't open it. That way you don't have to pay it. But you can't be doing that. You got to look.
Those bills aren't going to pay themselves.
That's
so you
true.
got to look at it.
But some folks do say, well, it's long term, and so don't freak yourself out now. Is that we should be freaking out then?
No, you should not. You should not freak out. But see, for me, I tend to not freak out when I understand and I really know what's going on. So I'd rather you have a firm understanding of what's in your account than just sort of hoping and praying that everything is going to work out.
Well, no matter what, you should start saving now, right?
Yeah, you absolutely have to start saving. You need to continue saving through these periods of volatility. I mean, the longer that you have money making money for you, the better off you are. The number one regret that I hear from people with regards to their savings and investing is that they wish they had started earlier.
Oh, God,
So
yes.
if you can do that, you give yourself the ability to take advantage of compound interest over time.
And what about your employer's contributions? How should we be handling that when it comes to what?
So this is one of the biggest tools that you have in order to save for retirement. If you have a match at your company, you have to contribute at least up to that match because that's 100% return on every dollar that you put in. You can't find that kind of return anywhere else. So you need to take advantage of that if you have that at your job.
If your employer comes to you today and says, would you like to max out on your contributions? Say yes.
Yes. Now, listen, everybody's not going to be able to do that based on their budget. And certainly in periods of inflation when costs are rising, you may need a little bit more of that money in your pocket versus going into your 401k. But if you can, yes, you should be maxing it out.
Well, I guess this is no time to feel lucky and take risks.
So it depends. If you're close to retirement, let's say you've got 3 years, 2 years to retirement, your stomach cannot take all of the volatility that's in the market, right? So you may need to take some risk off the table. If you're in your 20s, okay, and you've got 40 years to save, yes, now you should continue to put money in there. You can afford to take a little bit more risk, and that's how you're going to really build some wealth over time.
So what if we take a look, and with what we're seeing that we're losing. What are options? What do we need to do next?
So I think you should draw a line in the sand and say, listen, I'm okay. I know the market's going to fluctuate, but if it goes down to a certain point, I'm going to take some risk off the table because you know what? You can always go buy an investment again, but you can't let it go down 30, 40, 50, 60%. I mean, that's just something that's very difficult to recover from. So maybe you say, I can take a 20% loss, but beyond that, I'm going to really make some changes.
Would you try to pick out a stock that is more risky and get rid of it?
Oh, for sure. Yeah. So, for example, a lot of people who are in their 20s started investing during the pandemic, and they were investing in Bitcoin and all of these other cryptocurrencies. Well, Bitcoin's down 50% or more from its high. If you have a bunch of that in your portfolio, now might be the time to maybe, relax on that stuff and get into some more stable investments that we have some information about and that we know that are going to grow over time.
Okay. So, again, if you're closing in on 65, they're probably the most nervous.
Ratchet it down a little bit because you just don't need to get on this roller coaster. If things recover, you can certainly get back in, but now's not the time to be a hero.
Okay. So go look now, do your screaming. I know that one of our directors, Ben, he looked at his this morning as well. Do we have? That's him.
He's smiling though.
Yeah. Corey, who also works on the desk overnight, he looked at his this morning. Yeah.
Well, I didn't say it was going to be fun.
Okay, he probably did the best. Of
He
all the
wins the
screams.
best scream. It's the falling off. at
Thank
the
you,
end,
Rob.
too.
Thanks for having me, guys. Good to see you again.
Good to
Thank
see
you.
you.